and I made this mistake myself. I would always say to my wife, I want to become financially free. And my wife would always look at me and go, I already am. I got married August 30th, 1998. I haven't paid a bill since then. What are you talking about, financial freedom? And I said, okay, let me paint the picture for you. How about we can donate $10,000 to your favorite charity? How about flying your mother-in-law down to her vacation? How about going out and buying a car, not worrying about it? That to me is financial freedom. Once I said that to her, it clicked.
Hello, everybody. It's Jake Stenziano, host of Webro Profits Podcast, here with my co-host, the multifamily mentor, the coach, chef, father, six, the best-selling author, the G-Daddy, Gino Barber. Gino, how's it going?
Mr. Stenziano, I don't even know what to say about today's podcast because I got some great stories about acting like little schoolgirls back in the day where we couldn't find deals. There's no deals around, and now the guy's doing deals during COVID. So what a limiting belief breakthrough. So it's going to be a great podcast. How you doing today, Jake?
Always making it happen, big man. Pump the brakes because I got to get through some stuff here. We're doing a little bit differently. We have something really special for everyone joining us live on Facebook today. We're going to be doing a live Q&A after the show with our guest. So make sure you stay on to the very end and post your questions in the Facebook chat, whatever that is. And then the Gen U will DM you the call-in information for you to ask your question live to Gino, our very special guest, and myself if I get a chance to answer because I know you guys are hogs. So today's guest, without further ado, today's guest is Chris Jackson, principal and managing partner of Sharpline Equity and Deal Expert Coach here at Jake and Gino. Sharpline currently has over 500 units under ownership in their portfolio, and Chris has over 10 years experience in all aspects of real estate investing, including flipping, wholesaling, and multifamily. Chris began his career as a computer programmer. We could have probably used him, Gino, getting this whole thing set up today, but we're here now, and has over 15 years of experience in the tech industry. So without further ado, Chris, welcome to the show.
Thanks for having me, guys. Happy to be here.
Hey, it's our pleasure. We know that you've been rocking deals lately, and you've been laser focused through the corona.
Yeah.
So why don't you tell folks a little bit about yourself before we get into this, in case they don't already know you?
So I started out as a programmer, and I worked through to become a partner. But about 10 years ago, a partner at a tech company, 10 years ago, I got into the real estate space, and I was about 34 then. But like many people out there, for 10 years before that, I was just thinking about being a real estate investor. I just did analysis paralysis. I dreamed of being a real estate investor and did nothing. So then when I was about 34, I said, I got to do this. My wife can't hear about this anymore, that I'm going to talk about it. And I got my first deal, which was a 5-unit, then an 8-unit, and it went up from there. And I did it slowly. And I actually, after I was a small landlord with the 13 units, I was a really bad at it landlord and had to get good at it. Mm-hmm. And so I got involved with some flips and wholesaling and lending and made my way back to multifamily, then got into syndication. And about 2 years ago, I went full-time in multifamily. And I've done 7 full-cycle multifamily projects, which I'm proud of. And that's where a little over 500 comes in. We just closed the deal. And I also have a 200 plus under contract, which we won't talk about too much because I never talk about deals under contract because I need to maintain laser focus.
Mm-hmm. Love
you
it.
See that? I'm getting the hand clapping going on the Zoom right now. We're evolving, bro. This is like next gen shit here. So
I started coaching with you guys about 1.5 years ago, which has been such a great experience. Love the community. Love what you guys have created.
So, Chris, what problems were you experiencing before you joined Jake and Gino? Because you were one of the first pioneers. You were one of the beta, one of the test roles. Because I remember starting it, and for everyone, just picture this: I'm in St. Augustine in 2017. I'm walking around in my backyard, and I pick up the phone and I call this guy Chris Jackson from Long Island. And I'm like, Chris, how you doing? He's talking. I'm in multifamily. He's in multifamily. And we're both like little schoolgirls saying, we can't find deals. We can't do this. There's nothing going on. The cap rates are crazy and blah, blah. And, what were the problems were you experiencing before you joined Jake and Gino?
I guess I subscribe to the limiting belief too of like that there was no deals. That was what I was hitting too many markets, and I wasn't really laser focused and taking in really kind of that make it happen approach. You have to push through. And if you think about it, 2015, 16, imagine if we had bought more deals.
Mm-hmm.
Like
There's
things
some that
that we
I'm
saw.
kicking myself in the ass for some that we missed on because we were a little too stubborn. Yeah, for sure.
Think about those like 45, 49, 57 a door deals that now are like 80 a door all day.
Mm-hmm.
So, but I did push through and said, this is where I want to maintain my focus. And we still found deals, but it was only after massive action and focus.
So Chris, what did the community bring to you? I mean, did it bring you a network? Did it bring you the accountability? What was it for you?
So a couple things. It was definitely accountability. It was also branding for me. I was able to develop friendships and networking, but it allowed a platform that I felt safe to come out of my introversion and start posting things and become more of a thought leader, I guess. And that helped my brand and allowed for future partnerships and deal flow. It's really been a huge enhancement to my life.
So when you're coaching students out there, we've had this discussion. What makes a student successful and one that is not successful? Because people get into multifamily and they think within 3 months they're going to get a deal, and within a year they're going to become financially free. And I can tell you right now, it's not going to happen. You can stick with it. It's the long game. And if you work hard like Chris Jackson and Jake, you will get there. It's just that patience and persistence. What have you seen from your students who are really just crushing it right now?
It's focus on market. They analyze a few markets, then they hone in on one, and then they don't waver. When you do market wavering in the beginning, you allow self-doubt to creep in because you don't realize how much hard work it takes to penetrate a market. So you get far into a market, and if you give up too soon, you say, oh, that little voice comes in, the other market's easier. And then you go to the other market and you're like, oh, this market's hard. And you go back to the first market, and now you start self-doubt. The self-doubt begins.
So you have the angel over here, which is the primary market, and then you have the devil over here, which is a secondary market, and it's pulling you away from your focus. Because, dude, it took us 18 months to get our first deal, and we were stuck in one market. We just couldn't find anything. So I think that's a lot of truth to that. I like that.
And then no, I'm sorry, go ahead.
No, what happens is you actually don't know within yourself how hard of a commitment you have to make. So if you stick to the one market, as long as it's a decent market, you understand, like, I'm not working hard enough. I'm not persistent enough. I have to keep going. But if you bounce around markets, you never understand that within yourself.
So Chris, how do you select the market? What markets are you in currently right now? And if you're a listener right now, what should they be looking for in a market?
I mean, right now, the migration patterns that I'm out there talking about with the flight from density, like resuburbanization, I'm a fan of secondary and tertiary markets, but you have to be careful in those markets because you do need the normal drivers of job diversity and things like that, population growth. But you can actually find some markets that maybe are behind on the data right now because of the massive migration patterns that are going to start showing up that aren't in data yet. And as long as you have the jobs there, you can go there and be safe, but you just got to buy right, finance right, manage right.
So,
and I like secondary. I'll tell you some of the markets that we're in. I like Atlanta a lot. The problem with Atlanta is that it's discovered. So it's like the cap rates are getting lower. Everybody's realizing that it's more of a primary market now. We're in Augusta as well, and I can't find more deals in Augusta, Georgia now. I like Raleigh a lot, but Raleigh's also a low cap rate market. And then there's some secondary and tertiary markets that are my secret.
So why though? Why secondary markets? Why not primary? What's the why behind that?
Because in primary markets, they're known to have a more appreciating component over the long term. And what people will give up is cash flow in those markets to get a lower cap rate and appreciation. And that can be dangerous for a newer investor or an investor that doesn't have capital that they just want to park.
This is great. So Jake and I had a weekly lesson yesterday, and this is all of the buy right, selecting a market. Now, I want everyone on the call, write this down, and I challenge you. Before you focus and pick a market, focus on your goals. Focus on what you're going after. Because Chris just said capital appreciation or cash flow, right? If you're in Cleveland, Ohio, and it's your backyard, and you're like, people are leaving, blah, blah, maybe that may be a good market for you to start buy 50, 60, 100 units, get some cash flow coming in there. If that's your strategy, what are you willing to do? Are you going to be going into this business full time? Do you want to make a couple $1,000 a month like I wanted to do in the beginning? Do you want to become financially free? What are your goals before you can focus on a market? Now, honestly, if you're in California or New York, it's going to be really hard to cash flow. The cap rates are super low and everyone's leaving there. So what is your goal? Are you going to be syndicating deals? Or are you going to be leaving like I did, coming down to a different market? Focus on what you want to do, and then take Chris's advice on secondary markets and looking at cash flow and appreciation. Focusing on the market is huge, but if you don't know what your goals are, you don't know what you want to accomplish, it's going to be hard for you to select one. You want to add anything to that, Chris?
Also on the flip side of this, I just want to say, like, as a sophisticated investor, you have to think about some lower cap markets. Also, if you're a real hustler, like, and you can find real deals. I mean, you can go to a place like, call it Phoenix, lower cap rate market. That's going to help you if you're actually able to find real deals and pop rents by $300. You're going to win huge. So don't discount those markets. You just have to understand all the levers that are affected by the various types of markets.
I love that. So how do you go out and start getting deal flow in these markets once you select it, once you get into the market?
I mean, your first strategy is going to be, you got to get in touch with brokers. They are the gateway at first. And then also, what type of, how much capital do you have? If you are only going for smaller units, you can go to brokers, but you might actually want to be wanting to go direct to seller and be driving around and showing up and saying hi to owners and for like 20 units, 30 units, 15 units, things like that. You can actually meet the seller walking the property. Bigger properties, 50, 75, 100 plus, you got to make friends with the brokers.
So Chris, when did you realize you could do this full time? When was that epiphany?
It was after, I would say that's 2016. That's 4 years ago, but I didn't go full time then. I got my first big syndication with a group, and it was bigger. It was 56 units. It was big to me. And I realized that this is what I want to do. And I put a plan together that I was going to go full time within the next 2 years. And then I had a crazy 2 years of working my full time and real estate at the same time, but it was worth it. And I was able to exit.
Dive deeper into that. Was that a feeling of confidence because you've been there, or was it a financial number? What was that culmination leading to that event in terms of like, hey, I know I can do it because why?
It wasn't a financial number like, oh, I got the 56 unit, therefore everything's cool. Like, that is actually, I think, a misconception in syndication multifamily, that you'd get one deal and you're done. Now that can happen. You can get one deal and it can change your life 100%. But I think if you go into it thinking that, you could be disappointed. For me, it was more about, I have a knack for figuring out this beauty and complexity of larger multifamily. I was able to raise money. We were able to put the team together and execute the plan, and we were able to find the deal. And I was like, it was the confidence. I have, this is my playground. This is where I was meant to be. I just felt it.
So when you were getting ready for that, you had done deals previously, correct? It's not like you go up and you start and you do a 56 unit deal. So what was the lead up to this deal? What had you done previous to this? Was it all small multifamily?
Yeah, it was 5 unit, just myself with some family, private lending, family and friends. Then it was same with a commercial mortgage on an 8 unit. And then it was a bunch of single family homes, some flips, some wholesaling, some lending. And then I had a mentor that I went to. So I had a mentor that did it, and he doesn't do coaching anymore, but I learned syndication through him. And I said, wow, this is an interesting topic here to understand. How do you pull together this large buildings? How are these people doing it? These regular people doing it? And that's what attracted me to it. And then I went into a 16 unit, and then the 56, and then up.
So it always brings me back to Mark Twain's quote: "It ain't what you don't know that's going to hurt you. It's what you know for sure that just ain't so." Right? Because you think in the syndication model where everyone out there has got to be these big players, and Chris Jackson and Gino and Jay can't get into these big syndications. But in reality, it's just regular people, right, Chris, getting into these deals?
Yeah, I mean, that's like syndication right now, I think, is becoming a bad word. And and for good reason, I'm going to say, that we could get into. But for right now, it's getting a little bit of a bad word. But I found the beauty of syndication being like in 2015-ish, that normally like the 100-unit building was just for like the builder, the attorney, the lawyer at the country club pulling together deals. And I was seeing my peers, regular people, having access to the democratization of information being accessible and being able to do it, just regular people to get access to institutional grade assets and the benefits of big multifamily. And that to me was powerful.
Interesting point on that, because we love actually buying from the attorney, from the doctor, because what we find out is that they understand the benefits of multifamily and why they want to be there, but they're consumed in that W-2 position, and they don't have the time or the maybe sometimes even the desire to treat it as the business that it needs to be treated as. And therefore they suffer on the manage right component of the framework, and they actually create excellent buying opportunities. And we've purchased from a handful of these folks and actually repurchased additional deals after we bought the first one from them. So, you know, a lot of times where it's, hey, oh, it's a doctor, it's a lawyer, it's a builder who maybe understands the construction aspect but can't manage. Don't be afraid of that. A lot of times those are great buying opportunities.
Yeah, I mean, that is actually what's interesting is you would normally think to put that in the mom and pop category, but they're
100%
managing it mom and pop.
100% mom and pop.
I love that. So Chris, I'm a single family home investor. I'm a wholesaler. Convince me why that is not the way to go and why you pivoted to multifamily.
Well, here's the thing. I'm going to actually play the devil's advocate. I'm not that guy that's binary like that. If you have a successful wholesaling and single family rental business, I think power it. The thing is, but if you're flipping singles and wholesaling, you're just doing ordinary income and you're not really getting the tax advantages of ownership. So that would be the part where you would want to augment and add that as a parallel stream to invest and use those skill sets that one develops to do high transaction frequency. Like there's a skill set to being able to have your pipeline flowing all the time. So take that, continue it if it's successful, and then add it to maybe more deal flow in multifamily, and then learn about the tax benefits of ownership of multifamily and the scalability.
You knew that was coming out.
He's talking about the honeybee, everybody. It's complementary streams of revenue. And when we're talking about starting a business, if you're a single family home investor, I'm going to give you an example. If you're buying one home, you're buying two homes, you're buying 6 homes, you have your 10th home, it's really hard to manage. We're not going to get around it, right? You have 10 different hot water heaters, 10 different roofs. But if you look at it as a business, all of a sudden you can probably do some private lending. You can probably do some education through it. You can probably do some syndication through it. The problem with single family homes is you're going to get tapped out, and it's going to be a very, very difficult business. If you want to fix and flip,
difficult to scale.
The tax benefits really aren't there like they are with multifamily. So continue to do that. Continue to grow that side of the business, possibly put on autopilot, but convince yourselves that you can do this multifamily. It's just, you have to have the framework. You have to know how to get into these things. Like Chris didn't wake up one day and just know syndication. He went and he invested in his education to learn syndication. You either pay to play or you seek to serve. It's one of those two, right? And I mean, Jake and I and Chris, we've all paid a lot of money for our education to learn how to do these different strategies. And once you do that, that investment is going to come back 100-fold. So listen, once again, I'm going to refer to the honeybee. This will teach you how to do that. This will definitely teach you how to create those complementary streams of revenue. If you're doing that, you're creating nice little businesses, nice little different, and it's diversification. You're diversifying your streams of revenue. Start putting that money aside, like the richest man in Babylon. Start putting that money into your financial freedom account, and then start putting it into these other deals. You know, and Chris, another thing, when we start out in syndication, you can start out as a limited partner. If you're looking, to get into syndication, find a syndicator like a Chris Jackson out there who's looking for investors. You can learn while you earn. You can put a small amount of money into one of his deals, watch that deal grow, and do that in syndication. We've done that with our investors also. So there's another way for you to get into syndication. So, any thoughts on that, Chris?
Yeah, I mean, you also don't have to, like syndication is like the hot word. Like I said, it's like kind of becoming this like a little bit overused. There's also JV partnerships. Everybody can be a general partner. You can have 3 people in a deal that all own and they all put all their money into it. Maybe one puts in less because they found the deal, but there's like, it's a partnership situation. Syndication is the umbrella, if you will, over the top. One thing I want to go back to, because it made me think about while you're saying it, with the convince somebody that's a wholesaler or a single family flipper or even single SFR investor is the one difficult thing that I've found we had 60 single family homes at one point. We're down to 30. I could not scale because of the templatizing problem. Every property had its own uniqueness to it, whether from the seller, the nuances, some title issue. You get into the house and you can't apply what you know to that house unless you're completely gutting every single house and doing it like I know some single family SFR investors that are ultra successful. They have a model where basically they're going full gut the whole way, and that's their template. But I couldn't achieve that. I couldn't find it. And I find with multifamily, if you have a bunch of units and you go in with a business plan and you redo units, say one time, you learn, you mess up the first time, then you go into the second unit, you get better. Now by the third or fourth time, you're ready to do that just to go on 15, 100.
I love that.
We just closed on a 48 unit. We're adding 2 units to it, so it'll be 50 in total. But we have a standardized template. So each unit, this is what the model is, and everyone they'll go in and they'll duplicate the process. And the goal is for our folks to get faster and faster every time they do it and have more expertise, because it's the same thing over and over again. It's repetition, as Gino's point earlier. It's not a different water heater. It's not, maybe one has a water heater under the kitchen sink and they got to remember to pull off the board. And we've seen that, right? That's real shit. That's not efficient. And that's not what we want. So we want to be able to be as efficient as possible. And it actually goes to service to your folks. We believe in high quality customer service to the folks that are living in our apartment homes. And it's harder to achieve that when everything's different and a hodgepodge.
And Jake, if you go into that project that you're going into and you find that it's a 50 unit, and say after 10 units, you're like, guys, this didn't work, we can do something different. You can do another 10 different business plan and then repeat. You have
and it's one or two little tweaks, and it's not, and maybe, hey, we went a little heavy and we over improved this a little bit. Maybe we do not need to invest this because we see it's not getting the return, or maybe we're not hitting the metrics because we didn't improve enough. So it's bootstrapping. It's entrepreneurship 101. Test, measure, pivot, test, measure, pivot, test, measure, pivot. It's what
you got 40 units left to keep on repivoting. And then the units are going to turn over the years too, so you can keep learning. That's the beauty of the template.
Yep. So Chris, what you were talking about, the single family home, it comes back to buy right, manage right, and finance right. It can work in the single family home space too. That template works everywhere, because if you're buying those price points correct, you need to buy them right, these houses, and be able to gut them and then be able to actually reposition them and then manage them properly, right? And then actually get the financing. So all three of those aspects. And it also comes down to the 3 pillars of real estate, where we're talking about you need to buy them in the right part of the market cycle. This may not be the right part of the market cycle to be buying a home and completely gutting it. May be too expensive depending on where you are. So always fall back on that framework, whether you're in the single family home space, because it'll serve you well, creating your parameters, choosing the right market, and then ultimately you're managing a business. So you're managing these tenants as far as that goes. So that was really important.
I have a question actually on that, Chris, because we have some larger townhomes, we have some units with garages, and ultimately there's a larger square foot, and sometimes it's hard to basically get that rent per square foot. And when you're managing bigger space. Now in the single family home space, do you find a lower rent per square foot than in multifamily? I would guess that would be the case, but I truly don't know the answer to that.
No, because it varies so much, because houses are such different sizes. So I'm not thinking rent per square foot so much on the single family side. What I do notice, one piece on single family, is just tenants stay longer in the single family home. Sure. But I don't, for me, it doesn't counteract the negative of the lack of scale, because I believe that if you implement some other things in your community, like community development, reputation management, renewal management, you deliver great customer service to your community and residents, you can get people to stay longer.
Yeah. I guess I'm thinking, because even like if it's got a garage, it's got a basement, those are all nice, and you may be able to get a little bit more rent, but that's still stuff that you have to maintain, and it's more so. And again, guys, I'm asking honestly, I've never managed or rented a single family home, so I just
the turnover costs are massive.
That's
and
that's where my head's going. Like, okay, because maybe they're in the garage, but they trashed the garage, and you're gonna have to paint the inside of it now. Well, that's not something that, and that's going to be a real cost. There's $600-800 gone right there. So
yeah, you got a 4-bed, 5-bed house, and you even if the resident left it in great broom swept condition, you got to paint a 5-bedroom house. Like,
Yeah.
that's going to cost a bunch.
So
So
it's crazy, Chris. Jake and I had Harry Dent on our podcast a few weeks ago. I think everyone should go check it out. He's actually living in Puerto Rico, and he's renting a home right now because he's like, anything breaks, I'm renting a mansion right now. Here are the keys. I don't have to paint anything. He said I had a massive water leak a few weeks back. He called the landlord, and it's one of those things where it's going to be a difficult business to scale. Like you said, those turnover. I started with duplexes in Rochester back in 2008. They were great until the Section 8 resident moved out. And he left a mess, and there goes $2,500 for turn costs, and there goes my profit for the next 2 years, basically. So, I mean, you really have to work the numbers and know the numbers. So, asking that question, what are you looking for? What is your buying parameters right now, looking in this part of the cycle?
I mean, we're looking. It's mainly a leaning toward flight to quality, 1980 or newer. We just actually bought it was a 1950 building, but had been gutted to the studs. It was almost like a complete new build done in 2017. So it was essentially an A class, but I can't really call it that, B++. Walk in at 7 cap, which is crazy. And we're looking at that. So it's not the heavy CapEx needs on the older product. That is the CapEx tsunami that I'll give props to Bill Ham, who came up with that. But we use it interchangeably. But so that doesn't mean to say, like, everybody, when people are out there on there and we make statements like this, I think all of a sudden it's like, Chris, but why are you buying a 1972? Well, the answer to that is because I'm thinking about what are the CapEx needs of this 1972. If I can make the numbers work with that correct type of CapEx, which normally you can't. On the older product, if you have to put the large CapEx in, the water heaters, the P-TAC, like all those things, maybe the cabinets are going to be at the end of their life. If you are not thinking about those things, it's just going to be a CapEx from cash flow burn on you, and you're not going to get your cash flow. But so I'm leaning less towards that side because I don't see the CapEx numbers working. Flight to quality is more of our focus, but I would do a C class all day that's older than 1980 if the numbers work.
How'd you find it?
This one was the one that, the A class?
The B++.
Oh, yes, the B++. I'm not allowed to call it an A.
You can call it
that
an
was
A
actually
here,
props to Nick Diminich, my nephew. Proud of him. He works for Sharpline now, and he saw this actually come on the market. And within 2 minutes, he called and was like, "I love this thing," and we hustled it. And he was out there looking for this stuff, and he made it known that we were able to buy.
Well done.
Love that. So I want to piggyback off of what Chris said because it's really important. Jake and I, once again, we bought the 48 to be 50 unit deal. We paid 30. It's going to come out to be 39 a door for this property. The replacement is 85 to 90 a door. Conservatively, to rebuild this thing, we're going to be putting about $5,000 per door in CapEx. So we're going to be at 45,000 per unit, right? We're going to be able to refi this thing at 60,000 a door. So we're buying a 1984 property. It's a little bit older, but it's the buy right. We're buying it at the right number, and we're knowing what we need to go in there. And this would not be our first or second deal. We've had a little experience. That's the problem that Chris is talking about. When you're buying a 3 cap or a 4 cap in Atlanta, that's a 1968 build where you have to replace all the cast iron plumbing, you have to do all the roofs, and you're already buying it at such a high price point, and you can't push rents, then you're stuck. That's what Chris is talking about. But if he could buy a 6 or 7 cap in Atlanta with the ability to raise rents, and he can estimate the CapEx, he'll do that deal every day of the week. So really, at this part of the cycle, it's more important where you're going to be doing long-term fixed rate financing. He's probably got very cheap money on this. He's going to hold it for the long term. Even if he can't raise rents tremendously, he already bought it at 7 cap. He's limiting his downside risk. There's very little CapEx, capital expenditure requirements on this property. The tenant base is probably better. His ROE, which we like to call the return on effort, is less than dealing with a property where you have to reposition the tenants and reposition all the plumbing and everything. That comes into effect also, doesn't it, Chris?
Definitely. Like when you go into a heavier lift, like the project you guys got into, it was half vacant, I believe.
Yes.
50%, yes.
So yeah, like the return on effort has to be there. Therefore, this term that gets used by brokers sometimes, you care less about, obviously, like 50% occupied is almost like cap rates non-existent.
Yes.
But like you're buying at the correct price per pound.
Mm-hmm.
It's a construction deal we're building.
Yes.
So.
And can you really even build anything for Adiador anymore?
The G-Dad's conservative.
Well, see, I
Like,
am very, that's the thing. That's why we lose on a lot of deals. And you know what, Chris, I'm going to tell this to everybody. I want everyone to listen to this and write this down. No deal is better than a bad deal. I'd rather walk away from a home run than do a really bad deal. We've walked away from a couple of home runs. I'm not going to lie to you. Boulder Crest, so I don't want to say the names out loud, but there's some that have been really painful and looking back at it. And it's okay. You learn from those experiences. They may come back, they may not come back, but I'd rather walk away from those than, and I had a deal that I had for 10 years up in New York. It was soul sucking. I'll tell everyone, my phone would ring. I would see the property manager's name. And I would just go into I had a PTSD, right? I'm being real with everybody, right? And I learned from that experience. Don't pencil whip. Another Bill Ham quote. Make sure the numbers work. Make sure you know what you're buying. Make sure you know what your expenses are in the market. Make sure you're buying with real income. And if the broker tells you that it's a value play and you can raise rents, just watch the rent comp video that me and my son did. You have to know what rent comps are in the market. You have to know the market. So it's really important that you dive in and you do the buy right on the front end, because that's just the beginning, because that ROE really means a lot. Don't you think, Jake? Because we're going through
Gino,
it right
who
now
is this
also.
wild Bill Ham that you keep talking about? You guys are talking about this guy like, just want to make sure that we're,
He is the Bill Ham, okay? So he's
TBH?
He's one of the coaches, one of the Jake and Gino coaches. And
I thought he was the master coach, Gino.
Well, to me, he's my boy, right? I mean, if it wasn't for Bill Ham, we probably wouldn't have a coaching program, right? He's amazing. He's been doing it for 15 years. He started out as a pilot. He was buying a couple of duplexes in the bad market, and his model was the same as Chris Jackson. He got into bigger multifamilies. His first 400 units was owner financing. Didn't walk into a bank. Then after that, he figured out syndication, and he grew the syndication model. And it wasn't, as linear growth. This up and down, and I really have a lot of admiration for him because he wasn't a multifamily investor in the beginning. He was in aviation. He was a pilot. Chris was in tech. I'm a restaurant guy. Jake is a pharma guy. So the bottom line is, everyone listening to this podcast, you can all do it, because if we can do it, you can do it. You just need to have a plan. You need to have a vision, and you need to really work on those little voices in your head, right, Jake?
I'm loving the emojis on this thing, man. I'm going emoji hard today. So.
Gino, I want to piggyback on something you said about walking away from deals. Don't feel bad about walking away from deals, even when they're home runs, because I've walked away from a few that, like, I guess they haunt me. But the thing is, though, I've turned them from haunting me and being pissed off, why didn't I buy those, to be more informing to my gut instinct for the future. That was a deal. Why? Why didn't I do it? Why? When I see that here again and I feel the same thing and the numbers are the same, I'm going for it. Like, they inform you for the future.
Mm-hmm.
Don't feel bad about them walking away. Just they're adding to the arrows in your quiver of confidence.
I agree 100% with you, because Jake and I, as our evolution went, we weren't keeping up with the market. We were used to buying 8 caps, 30 a door. And as the market elevated and listening to all the locals in the market, whether you're in Indianapolis, Indiana, whether you're in Jacksonville, Florida, you listen to the locals and they're saying prices are crazy, but you should know where the jobs are growing, where cap rates are compressing, money's becoming cheaper, the economy was starting to expand. Those are all things that we learned. And now that I look back at it, that was one of the biggest mistakes that we made, was we did not keep up with the market. We didn't anticipate rents were going to grow so much, right? We didn't anticipate a lot of this stuff. So now when the market recycles, you're like, okay, I have all of these different strategies that we can employ, whether it's owner financing, whether it's a syndication, whether it's a JV partnership, whatever that may look like, whether it's a refinance and roll, that may look like, we can use it, all of those different tools in the toolbox. So, Chris, what does your dream look like? What does building the dream look like for you today?
So the dream is to get, I have a unit count dream, although I don't like to be governed by it, but I would like to get over 1,000 units, because it gives me the certain scale I feel to eventually, we'll see when this happens. I'm not going to wait until this occurs, but I would like to create the arm of self-management at some point.
So for you, Chris, when you left the job, though, what did that feel like? What did your wife say to you? You crazy? What did your family say to you?
Well, remember, though, since my wife has been hearing about real estate investing since I was 25 years old, so it was a little bit like, finally. But it's also the ups and downs. Being an entrepreneur is a lot of the spouse, like having entrepreneur spouse like have glazed over eyes, super high concentration. There's a lot of ups and downs with being the spouse of an entrepreneur. So there is the positives and negatives, but she's super proud, super supportive. I would not be able to do it without her.
So give us a couple tips on spousal communication, because me and my wife, we do the Multifamily Zone podcast, and it really comes down to, if you're going to get into this business, you need to be on board with your spouse, whether they're going to be part of the business or not. They're going to hear about the ups and downs. You're going to get the get-there-itis. I just spent a lot of money on my education. Why didn't I do my first deal? You know, give us a couple tips on, you know, being able to discuss it with your spouse.
Well, I've seen both where like you're disappointing your spouse that you're just talking about it. So like, and then I think it's about seeing that you're taking consistent action. I tend to be ultra focused. So I don't know if I'm the greatest dude out there to be saying I have the best communication out there. My wife would be like, yeah,
read the 5 love languages.
It's amazing when you're not listening to me, Chris. That's so amazing. But I think it is about sharing the ups and downs. And I think as a guy, it's tough to share some of the stuff that's maybe troubling you, but you look to your spouse to get input, and they can provide excellent feedback and perspective, and that brings
bury that down deep. Don't talk about your emotions.
So, Chris, you do not want to go out to dinner with me and my wife, because Jake has experienced that before. And the life coach and my wife comes out and starts hammering him with questions, and we're like, okay, this lobster mac and cheese is delicious. What you know, it was just it was the funniest conversation. And we're talking about the waitress and her sales skills and everything. We're trying to really avoid that conversation, but Stenziano, remember that, Stenzi?
Oh yeah, I remember.
It's coming back in a couple of weeks, bro. We're getting it back on the docket. So it's important. It's really important to have your spouse and, you know, on board with you. My wife could care less about real estate. When I tell her we did a refi and roll, we have $300,000 coming in, she doesn't really care about that, but she does care about, you know, hey, can I support you in this way? You know, the podcast that we do together is really a support lever for me to be able to speak to other guests or speak to her on that. And it's just, that's our way that we communicate.
I think you also have to teach your spouse about why you're doing it. It's not just about ego, and it's about explaining the paradigm of wealth building, which is a concept that is very difficult for a lot of people that haven't been taught it. Really, all of us haven't been taught it. So like the concept of wealth building and certain good debt and refinance, and then patience and a little bit longer timing, maybe like house flipping is cool, and a spouse can get on board with that because it's, oh my gosh, it's HGTV, and then we sold it and we made a pile of cash. But like multifamily tends to be a little bit slower, and then all of a sudden it's, wait, we paid that on our taxes? That's awesome. And then it's cash flow. And it's about having assets for the future for your children.
Chris, you said something very important, and I made this mistake myself. I would always say to my wife, I want to become financially free. And my wife would always look at me and go, I already am. I got married August 30th, 1998. I haven't paid a bill since then. What are you talking about, financial freedom? And I said, okay, let me paint the picture for you. How about we can donate $10,000 to your favorite charity? How about flying your mother-in-law down to her vacation? How about going out and buying a car, not worrying about it? That to me is financial freedom. Once I said that to her, it clicked. She's like, okay, we don't have to worry about our bills anymore. So if you're talking about financial freedom, it means different things to different people. Make sure you're laying out what you're trying to accomplish, and make sure that you have your significant other on board with you. It's always painting that picture. Financial freedom doesn't mean anything to her because she's never worried a day in her life. That's not what her needs are, her concerns are. That's what Jake and I live and you breathe 24/7. That's what our main focus is on. And our goal is just to get enough cash flow coming in. And she had no idea about that. So that's really important that you.
And don't get upset with your spouse. And that's like a lesson to me over the years. Like you have to re-explain it. Sometimes you may not actually really understand the benefits. So it's an aid to keep on talking about it so that your concepts become more solidified. And that actually is going to help you in the future when you're talking to investors.
I love that. Last question before we go to the personal growth, Chris. I'm stuck doing some single family homes. I just have a pile of cash. I'm young. How do I get into real estate? How do I get into multifamily?
So you're doing single family homes, you have a pile of cash and you're young and you have a W-2 job?
Either one. Wherever I am in life, what are the first couple steps that I need to do to get into multifamily?
So you do have to get you do have to get educated. I mean, everybody's like sirens go off. Oh my gosh, it's pitching. But I had a mentor. I got educated twice. I had a mentor to get my first deal. So I hired a local mentor, and then I had a second mentor for syndication. And then I surrounded myself with a group of people that were doing the same thing, such as you guys in the community. I recommend that you go find a community first. Maybe finding education first will feel a little bit too red flaggy to people that are skeptical. Find a community first, and then know that your next step is going to have to figure out how to get educated.
Love that.
Word to mother. Obscene profit timeout. Go. Hey, gang, here at Jake and Gino, we believe that people with financial intelligence can change the world. Whether you're currently working at W-2, fixing and flipping, wholesaling, or buying single-family rentals, but you know that multifamily is the right vehicle for you, we encourage you to visit jakeandgino.com/apply to schedule a complimentary consultation with our team. If for any reason we're not a fit, our team has tons of free resources that we will share with you to help you along your journey. So if you're ready to stop spinning your wheels, go to jakeandgino.com/apply to schedule your call now. Now, Mr. Jackson, best habit for success. What is it?
Ooh. Okay, for me, it's optimism.
Ooh, talk to me, Buddha.
Because I didn't grow up as surrounded by optimism. That doesn't mean my family was negative. They were not. It's just that I didn't understand what an optimistic, positive mental attitude really was. And I had to force myself to figure out what that meant. And when I forced myself to think through things in a solution-oriented framework, and every morning I think about my day, and I think about what I'm grateful for, and I think about some optimistic solutions, it actually creates a base for me to react better when the surprises are going to happen in multifamily, so that you can come to the right solution. Sometimes if you have a negative framework in your mind, you'll answer the phone the wrong way. You'll create a discord with people that you have to then damage control. You might ruin relationships a bit. You won't enhance them. And I have figured out that and it's not blind optimism, it's optimism. And I have forced myself to have 51% of my time. Like that was when the flip happened. When 51% of my brain was giving myself, was more of a fan than a critic, I was like, okay, I know what to do. I can think optimistically, give me the ball. And I started to think optimistically through solutions, and that changed my universe.
That is one of the keys to success in life. If you're going through COVID right now, you're depressed, you're all by yourself, you're not part of a community, are you going to pick up the phone and call the broker? Are you going to start putting deals in? You're going to putting LOIs in? Are you going to start analyzing deals? Are you going to do property tours? Chances are you're probably not, because you're working from a level of catabolic energy, which is negative and draining. If you can all of a sudden flip the switch, and how do you do that? Really, it's your physiology. Stand up, take a deep breath, look back, smile. All of a sudden your physiology changes, right? And more importantly, start a podcast. Look at these two guys. After this call, I'm ready to go after this call. I don't know about you two, but I'm ready to take the world down. If I've got to analyze
Push-up competition, let's go.
Dude, but you know what I'm saying? That's the reality. It's all the, like Jim Rome says, 5 people, you surround yourself, that's what ends up happening in your life. And if you want to become more optimistic, start surrounding yourself with optimistic people, or start doing those tasks that will lead to that. And every day it's habitual. We aren't depressed. We do depressed, right? And if you can get out of that, and you can, maybe the word optimism might not be the right word, but really being positive, have that positive outlook. Look at all the opportunities that come from the problems that we have in life. If you can start doing that as an entrepreneur and as a person, your life will absolutely 100% change. I agree with you, Chris.
PMA, positive mental attitude. The woo is real. All right. Best tip for scaling a multifamily business.
Best tip for scaling a multifamily business is going to be, you gotta learn how to network. You have to. You have got to, if you are not putting effort into developing authentic relationships, I think you're going to be limited by the capital you have. And then you're not going to be able to raise capital if you're not developing relationships. And then you're not going to be able to execute if you don't have a team. So you need to get people around. It's like this, it's the thing we hear, like I'm 45 now. And it's like, you always heard when I was like teens, it was like, oh, that guy can call anybody and get things done. That's building relationships. Like so you have to get out there and network. And part of that is your branding. So reach out, be uncomfortable, develop relationships. Like I'm going to get in the car later for 4 hours and I'm going to be on the phone the whole time talking to people.
Big tip. Listen to John Rowland's podcast we had on giftology. We've done a couple with John, and gifting and being intentional and working on those relationships, like Chris says, is really important. It's truly important. And at the end of the day, life is all about creating relationships and having fun and enjoying your time with people. Doesn't matter how much money you make. You want to look back and say, wow, I helped that person out, or I created a business, or I did something. Working with other people and being able to do that with others is really powerful.
I've found so many times that when I'm in a jam, I don't know something, I get stuck even in my own mental limitation of solving the problem. I just start reaching out to people and ask questions, and the solution comes from an area that I never would have thought of. So it's those friendships, relationships that I've developed that I can call upon on a moment's notice, and they pick up the phone.
And Chris, how many times have I had students reach out to me and say, I need to call with coach? And I just like, Chris Jackson, text Bam. And you know what? They need that, right? It's something like you said, that positive attitude when you can look at a deal with a student and say, hey, this is what you should be offering, or hey, did you look at this? And it's like that 30-minute conversation can completely change somebody's life because of the optimism you give them and because of the experience and the expertise that you can lend to them for that 30 minutes. It's just life-changing.
And mine.
Yes.
I get something back from that person. Like I have like a mental catalog, if you will, like, oh, that person's in this state. Like, oh, I can call that person. Oh, wow. I've never heard of that situation before. And then 2 months later, I'm going to be put in a position where that's right at the forefront. And everybody's gonna be like, how'd you know that? Like there's a value exchange to both sides of this relationship.
Yes.
All right, last question before we get to the live questions. If the you can pull it off, so Jen, this is your warning signal right now. You mentioned about property management company and getting more vertically integrated. Talk to us about what the future of that looks like and what steps you're taking to get there.
It will be gradually. I'm trying to find, like, we've had a lot of great success with third-party management, so it's not. And we've also had some situations where it didn't work out. So I understand both sides. So I'm doing it gradually and picking the right project where we do it and scale up correctly. But yeah, I mean, that it's going to look like a gradual, when we start building in a certain location, which I won't say is, and I have more units, that's probably when that would make more sense. But we plan on doing it gradually. I've seen what you guys do. I see what others have done, and I think we're ready for it.
So, Jake, I've got to give the recap real quick. So 25-year-old Chris Jackson.
Bring the recap, baby.
With the wife, I'm getting into real estate. Just going to do the real estate thing. 34 years old, I'm going to do the real estate thing. I'm getting into real estate. I'm a tech guy. Going to happen. Scales up to 60 single-family homes. Wow.
What the hell's going on, man?
Has the fateful conversation, gets into syndication through a mentor. Never knew what syndication was. Has a fateful conversation with Gino back in 2017. While he's in St. Augustine and Chris is up in New York, in Long Island. Joins the Jake and Gino community. A year later, in 2018, decides to ditch the job. I am out of here. I'm going into real estate full time. And in the next 2 years, he does 7 full cycle deals, which is pretty amazing. That first 56 unit deal, he said, really gave him the confidence to get into multifamily full time. And now in 2020, his life is revolutionized. He's just continuing to crush it. And the most important thing is he's giving back. He's an amazing coach with Jake and Gino, giving back his time. And I think more importantly, he's extracting a lot of value because he's learning. As coaches, we not only do we learn and we teach, but we learn from our students. So that's the amazing part, that number 5 and number 6 on the basic human needs. You're actually creating growth in your life because you're growing and you're contributing to others. And that actually leads to total fulfillment in life.
Yeah,
wow, there's a life coach coming out for you.
Yeah, I mean, people ask me all the time, like, why do you coach? And I think it comes from a place of skepticism, unfortunately, but that's okay because I understand. I'll tack that head on. What do I get out of it? It's exposure beyond the thing that you said, and it's accurate. I get fulfillment out of it. I actually really enjoy it. But a lot of people hear that and it goes one ear and out the other. Chris, what do you really get out of it? Well, it's that.
What are you really doing, Chris
It's
Jackson?
that, but I'll give it the other answer that might make sense to the skeptics. I get exposed to more deal scenarios than anybody else, and I put myself into the cadence of everybody, and I'm able to put myself into a place of empathy where the person is in their life. And it allows me to go back and forth with various seller situations, and I get exposed to more deal flow than others. And it gives me an extra edge against my competition because I saw more deal flow scenario thinking than the others.
I love that. And Jake, I don't want to continue because I know you want to get to the questions, but
I don't even know how we get to the questions. Is Jen, you going to pop up here or the questions going to get dialed in? I don't even know how we get there. So let's see where this goes.
This is really important because, you know, you get that dopamine effect. There's nothing cooler in life, honestly, than showing somebody how to buy a 30-unit deal. And then a year later, they quit their W-2 job and you're part of that. I mean, you weren't the only reason, but you're one of the real elements of that. And you just help somebody out, revolutionize their life, their families. How many families have you touched and helped from that situation? It is so freaking fulfilling. I love that aspect of it. And if there are more people out there doing it, and you know what? If you can monetize on it, great. You do make the money, but you're not going to be doing these calls just for the money because it's not worth just the money. But like Chris said, all of a sudden he's got another potential investor out there that may want to invest in one of his deals. He has deal flow. I know he's actually found some markets from investing, from speaking to students and I love that market.
Oh, there she is. The U's in the house. Lead us to the promised land now. What do we got going on? Jennifer.
Here.
So do we have somebody out there or no? We went too long, Gino. We fell flat on the first attempt here, bro. Well, Facebook Live, we'll get you next time. Were there any typing questions or no?
No, it looks like no questions yet at this time.
Well, we've been doing it for an hour, so I think that's all we're going to get at this point. So
we blab.
We blab. Went a little long on this one. So G-Dad, we'll get him next time. I'm sorry, Chris Jackson. Woo! I am for real. We'll get it next time.
To the folks, next time, make sure you put your questions in. We would love to answer your questions
on
live.
the Facebook chat section, right? Like under the live piece? Okay. Let them know you.
I mean, you have a wealth of knowledge. You have 2,100 units right here. Take advantage of the opportunity to ask these questions to these powerhouses in the industry.
Whoa, easy now. So, all
right,
guys. Yeah, that's how we do it.
So do you
Chris,
show this,
Gino, Jennifer,
afterwards after? Like you do just a live, or do you show it as a recording?
I did a watch party too.
Oh.
All righty, buddy.
All right. Hasta luego.
Thank you.
Thank you, guys.